Welcome everyone. This is the Sunday weekly breakdown that we do here. So as always, we're going to go through the fundamental side. Some macro fundamentals, not much is happening just yet, but there are a couple of things I do want to go over from global governance and global economic governance side. And then we'll go into the technical analysis here with Stefanos.
How's it going, guys? Hope everyone's having a great weekend. Glad to be back on the breakdown with you guys. I was just down in Key West for a wedding, so I was very happy to get back on here and breaking down the charts for you. So hope everyone's doing well. Let's get into it.
Yeah. So let's start off with some COVID news first. So it seems like now instead of just relying on numbers, we're starting to shift our focus to other measures as the next stage of the pandemic emerges. So what that basically means is that a lot of the developed countries, they're vaccinating their people and they're getting some positive numbers where the numbers are starting to decrease when it just comes to the initial COVID variants that are coming out, because we did get the vaccines out to majority of the people, majority of the population. But now, and as you can see, it says the link between infection numbers and deaths appear to be diminishing. So that just means decreasing over time. But now it seems like the focus is on learning to live with the virus. And a lot of that comes from the new variants. So, like the Delta variant in the UK now, because of which they started to delay the lockdowns and extend it over to July instead of June 21st when they were supposed to open up. And so now the focus is on how do you learn to live with the virus? Very similar to any other virus that you've seen coming out, which is, like Ebola, or even before COVID-19, there were other variants that were coming out. So with any virus like this, there's always going to be new variants that come out over time. But it depends on you as the country. It depends on your healthcare system. It depends on your technology. It plays a huge part when it comes to healthcare. It depends on you. How do you handle that? So it's possible they're saying that we'll get to a stage of only monitoring hospitalizations instead of monitoring people who aren't hospitalized, but they died or the cases are increasing. A lot of these people, they test positive, but they still stay home until things get worse, and then finally they go to the hospital. So there's a lot of measures that they're using to track people that are testing positive, but now it comes down to shifting that focus, because as new variants come out, these companies are coming up with the vaccines. They're all saying that the current vaccines, they're not going to be as effective, but they're going to be effective enough so that you won't die, pretty much, right?
Mm-hmm.
You could go to the hospital, your symptoms could get worse. There's still that chance of you dying, but it's just that it's going to help.
Very well.
It's going to help a huge amount of people from dying. And that's what the vaccines are.
I think this is kind of what we've been, or a lot of people have been waiting for. Is like we knew this is something that at some point it's going to be like the flu, and that's something we're going to have to live with.
Right.
If the majority of the public gets vaccinated, then obviously that's very good because there's not as many hosts walking around, so not as many people are able to actually get infected with the virus. So we're lucky it's not much more serious. That's kind of the way I look at it, but yeah, I think this is what a lot of people have been kind of expecting. It's like this is something we're gonna have to live with, herd immunity, and
Right.
then also the vaccine. Both those two things combined is what's gonna get the economies back rolling again.
And these are all the things that we've heard from other countries already. So in the beginning, the UK or even Europe, they're all talking about herd immunity. There's actual articles on it where the officials are coming out and they're actually considering herd immunity. But for that to happen, you need to vaccinate a majority of your population,
Yep.
right? And then from there, it was also UK who said that they're going to try to set up camps like you do for like the flu every season. So they're going to try to set up camps where people can every year go get vaccinated as new vaccines come out
Mm.
for this virus. So yeah, these are things that we've seen over time. So none of this is new. These are just, again, the history is always going to repeat itself. There's always just going to be a different catalyst, right? It's always going to be a little different situation. So it's just, you got to identify some of the key points that make up the situation. You're always going to see the same exact thing over and over
Yep.
again.
By far the most important subject, I think.
Yeah, right. And then, yeah, so here, another key sentence that I wanted to kind of highlight here was the strain on health systems left leaders little choice but to place curbs on public life, disrupting economies and forced people with other medical conditions to delay important procedures. We had the first lockdown because of COVID back in 2020. People weren't even allowed to go to the dentist because they wanted to use some of those resources in some countries and some states for to accommodate people who had COVID because the cases were rising, right? Some people's surgeries were delayed because of this.
Yep. Like
So
researchers.
yeah, so that's what's happening right now, and so now the scientists and government officials, they're looking to see whether the widening scope of vaccinations will finally break that cycle. But it seems like every time a new virus comes out or a new variant of the virus comes out, it's just going to get that much harder. But again, it comes down to you as the country. It comes down to your healthcare system. It comes down to your technology, your investments into that technology of how well are you going to be able to prepare yourself for new variants. These variants are always going to come out.
Yep.
But this is one thing that I did want to highlight when it comes to macro fundamentals from the COVID side, because it still shows we're kind of making a little bit of progress where the countries are starting to go from like, okay, we're just going to stay shut. We don't know what to do. That's what you've seen in India. Like the leaders, literally, they're just like, we don't know what to do. But
Hmm.
now they're like, okay, we're going to kind of shift our focus and kind of move to a little different measure than what we've been using right now, but it still kind of brings in that uncertainty of, how what is the world, what is a new normal going to be like, right? When they say learn to live with the virus, what does that exactly mean?
There's always going to be that degree of uncertainty, but people just have to learn to live with it.
Right,
That's what it's all about, you know. We
right,
just got to adapt and move forward.
right. So recently there were still a lot of like G7 meetings happening and all of that. So it seems like the European Central Bank's president said that its governing council is making good progress and talks on the biggest overhaul of the institution's monetary policy in almost 2 decades. So actually, Stephanos and I were just talking right before the call here that a lot of central banks that have changed their framework when it comes to monetary policy from 2008 to now. So back in 2008, we're using the Fed's example, but back in 2008 and before that, the Fed was focused on maximum employment, their dual mandate, which is maximum employment and then price stability. And they were also focusing on targeting that 2% inflation rate, right? And so now, after the financial crisis, after the transatlantic crisis, and a lot of these other financial crises that we have seen over time, now the Federal Reserve has kind of changed its framework of monetary policy. And so they are still targeting the dual mandate. Nothing has changed there, but it's the factors that go into that. So instead of just focusing on maximum employment, they thought about, hold on, so what makes up maximum employment? What are we actually targeting, right? They took a step back and they kind of thought about what exactly makes up maximum employment. So in the past monetary policy statement, recently, to maybe one or two policy statements ago, they literally mentioned in there that they were looking at Latino employment numbers. They were looking at Black employment numbers. They were looking at the demographics of, what are the different demographics that are being affected, or even is it middle class or low income, or who's actually being affected. And if we see progress in those numbers, then that means we're making progress towards maximum employment. So
Mm.
they kind of broke down what exactly is maximum employment. What do they mean by that? And that's what they started focusing on. And then price stability is inflation. So you don't want to have hyperinflation and you don't want to keep inflation at very low levels either. You want to have that good like maintenance. So for in that case, they said that they're okay recently. That's why they said that they're okay with inflation being high right now, a little over 2%, what they usually target for the short term, because when they do increase the interest rates later on and they do kind of move from expansionary monetary policies to contractionary monetary policies, then they will be able to bring down inflation to an average of 2%. So
Mm.
instead of going to that 2% target, there's now saying average of 2% over long term. So that's what you're seeing across central banks. Even Bank of England changed their policy framework. right? And that's on their website. And now, as you can see here, the European Central Bank Governing Council is making good progress in talks on the biggest overhaul of the institution's monetary policy in almost 2 decades, so in almost 20 years. Same exact thing. So they met this weekend for the first time since the outbreak of the pandemic. The talks in Germany aim to retool the ECB for the 21st century. So they're trying to change that with the new inflation goal, better ways of measuring the economy, and agreement on how to treat issues such as climate change and inequality, right? So now you're starting to see an entire change in central bank frameworks to kind of have a fresh look at profound economic trends, generating thousands of pages of insight to inform policy decisions in the post-pandemic world, potentially for decades. So you're seeing a change in how these central banks are looking at the economy. So their goals stay the same. Every central bank wants maximum employment. They want price stability. They don't want, hyperinflation or just too low of inflation. You never want an economy to be volatile, right? You want it to be stable, and that's what all these central banks are now working towards.
The one thing I do understand is, the inequality thing and looking at different demographics to see where we could get maximum unemployment, stuff like that. I understand that. I just don't understand the how the central banks get into climate change and some of these, partisan issues or I don't understand what their, and like I said, maybe you can help me understand that. I don't understand what their role would be as far as like monetary policy and then tying that in with climate change.
Yeah. So with climate change, it was the same exact thing. So people did it in finance specifically. People weren't really sure, like, why do we even care about climate change? But now you're starting to see a rippling effect of climate change just from like the environmental side into finance, right?
Okay.
Into more specifically, it started in banks when banks started to see climate change affecting their operations. And then after that, they started to see that in developing countries specifically, climate change was getting pretty bad,
Mm,
right? We don't see it as bad in our developed countries here in America or in the UK or in Europe or in Japan like that. Like we see it in places like Africa, Brazil, or a
mm.
lot of Latin American countries that are low income still. And then from there, the IMF, the World Bank does more of the development work, but they started to look into climate change and they're like, yeah, it is actually affecting the economic stability of a lot of these countries. And then from there, the central banks, they started getting involved because, again, those big institutions, they're like, okay, this is actually affecting the finance world. So climate change isn't just for the environment. It used to be, I mean, years ago. But now as things are getting worse, it's affecting the finance sector as well. And it's starting to affect obviously healthcare and a lot of different sectors of the economy. And so
Interesting.
the central banks, they're not going to come out with policies saying like, increase recycling or, decrease the electricity that you're using or, whatever it is. But they're definitely trying to be a part of climate change. They're definitely trying to contribute as much as they can from the finance side to climate change, because that's supposed to bring in a lot more stability to an economy. And that's what the banks want.
That's a great explanation because I think majority of people are thinking that same way, and that's the way I was thinking. Like, what are you going to start recycling more?
Right.
How does that tie into monetary policy? So if it affects the banks and it affects everything else, then obviously they got to get involved a little bit. So
Right.
yeah, I was just confused about that. Again, I understand the demographics and seeing what cities in the U.S. that need different things and
Right.
but climate change just what?
I'm glad you asked that because that is a very hard kind of topic for a lot of people to grasp when
Yeah,
it
no,
comes
your
to climate.
explanation will help a lot of people.
But whenever you have, there's like new topics that are always going to come up. But whenever you don't understand it, kind of try to take a step back and kind of think about, well, how is this affecting a consumer? Because the core of any economy is the consumer.
Hmm.
Anything is affecting the consumer, it's going to translate to the retail side, it's going to translate to the manufacturing side, it's going to translate to the finance side, right? So just kind of think about how does it affect the consumer? How does climate change affect the consumer,
Yep.
right? Because of like poor health quality, they could get sick, especially people with underlying diseases, right? And then like what happens after that? I kind of just think about that entire like chain link sequence that happens, and then how does that eventually translate into finance? Or like if you're looking into healthcare, how does that eventually translate into healthcare or tech or whatever it is.
Absolutely. And that's a great point. You think about the consumer with everything. So, guys, keep that in mind when you're thinking about anything affecting the economy, just think of the consumer and how they're the golden goose. That's what everyone's looking at when it comes
Right.
to the economy and how well it's running. How healthy is the consumer?
Right.
So, to your point.
Exactly. And then another thing that I really want to quickly just go over was developing countries. And this is the best example. India is the best example that we have of an underdeveloping country, emerging economy, still struggling with COVID. So the India official warns of early third COVID-19 wave. So they have a third wave already coming in. Infections could start rising again in 12 to 16 weeks. That's what the officials are saying here. The director at the state run All India Institute of Medical Sciences. And that compares to the 4 to 5 months new waves are expected to take peak, right? So that means for the next couple of months, India is still going to be in a lockdown because of the new wave that's coming out. But again, this kind of ties into the previous article that we looked into, where it's how do you learn to live with the virus, right? And so this is the third wave for India, and it's because they didn't have enough vaccines to support their entire population. And now, even in our last breakdown, you must have heard us talking about how they're sharing beds, they're sharing oxygen tanks, right? In India between patients. And so now this is just an example of how do you learn to live with that? Is that how India is learning to live with that? That could be one question. Or are the officials actually going to try to accumulate some more vaccines for their population and then from there kind of make better decisions, make better policies when it comes to healthcare and trying to get this virus under control?
China has no problem with that. Vaccine doses, that's pretty crazy. 2.5 billion already. That's great.
Yeah,
Worldwide vaccine doses administered.
right here.
Yeah,
Yeah.
that's a big number. That's good.
Yeah, and the developing countries are already coming together. The ones that have already vaccinated a huge population of their countries, they're coming together to export their additional vaccines out to people. Israel started exporting expired vaccines to Palestine, and that's what I found very interesting. Like, how is this still happening on a global level? We have so many global governance institutions, and yet no one has the authority to step in and say, like, hey, you can't do that. And it
Mm.
comes back to when we were having a discussion about G7, where I said that that's not even a formal institution. But on a global level, none of these institutions that are the ones that are established still don't have any authority. And like, unless they have, let's say, an army or like some sort of like authority force to go into the country and make it happen, which no one does. But it's just countries are coming together saying like, okay, this is a formal institution that's being formed, but it's just leaders coming together from all these different countries and just agreeing on things. If they don't agree, then they leave that institution and nothing happens. And that's the global governance that we're sitting in right now. The IMF, the World Bank, the WTO, whatever else that you can kind of think of. These are some of the ones I could just think of right off the top of my head. But none of them have an enforcement authority to go into any country and say, hey, you need to stop doing that. It's just like, okay, well, if you're not gonna do it, then get out of our institution, and that's about it.
I'm just a little surprised Palestine's even like trusting Israel to get vaccines from them, after everything going on right now. Like
That's
that's
also
the country
very
you want to get your
interesting.
vaccines
Yeah, that's also very interesting to me because again, you could kind of think about what's their situation right now. They're kind of locked in, right? They have nowhere to go. They're just like right in the middle, kind of just locked in. So it's like either you take the vaccines or you don't take the vaccines, and your people are still dying of COVID,
from?
plus
Yeah.
of all the other geopolitical stuff that's going on, all the bombing and whatever it is. And then also they did have a truce for a little bit, and then I saw another article and a couple of other articles actually where Israel did end up breaking that truce. So now you still have those geopolitical tensions coming out, right? So it's what do you do if think about it as yourself? If you were just locked into, whatever city or town that you're in, whatever neighborhood that you're in, if you're just locked into that, what do? You don't have any other resources to reach out to.
Yeah, it's tough. It's got no other choice, I guess.
Exactly. And then on top of that, you have some more geopolitical tensions coming on where Iran, the nuclear talks drag on after Iran elects a hardline president. So in the past breakdown, I did mention where it was the U.S. stepped in, and there was Iran, and I believe it was one of the Latin American countries where they were having a weapon deal, a so-called weapon deal. And the U.S. told Iran that if I actually find out that you're doing the weapon deal, then I'm going to place some more sanctions on you. So there's already sanctions on Iran. And if they were caught into that a weapon deal, then there were going to be more sanctions on them. That puts pressure on oil, OPEC. And so if you're trading oil or USD CAD, this is something that you want to pay attention to, because the only way that those pressures are relieved from OPEC is only when Iran, which is an oil rich country here, is able to take off the sanctions, agree, talk to the US and have them take off the sanctions off of them. So then they can start exporting oil to the US and to a lot of the other countries as well. And
Hmm.
so now Iran has a hardline president. There's a possibility that there's actually going to be more sanctions, a very thin possibility that the sanctions could be lifted, but right now it seems like that's kind of difficult at the moment. And then after that is the last article that we have, and we'll quickly go over the economic calendar, is emerging market bulls pin currency hopes on hawks outpacing Fed. So if you don't know what hawkish or dovish means, really quickly, I'm just going to go over that. Hawkish just means that you're in support of increasing interest rates, and dovish means that you're not in support of increasing interest rates. So think about hawkish as contractionary policies and then dovish as expansionary policies. So the emerging market currencies were hit by a hawkish Federal Reserve could soon regain their record run against the dollar on expectations that developing central banks may actually outpace their US counterpart in policy tightening. So the currencies of Brazil, Russia, South Africa, Hungary, a lot of other countries have delivered multiple rate hikes or are expected to do so soon. And this is another thing that Stefanos and I were talking about. Stefanos, you could elaborate a little bit more on that, is that back in 2008, right before the crash happened, they actually did increase interest rates. And so that's probably what we're seeing on a global level right now, right? You're not seeing a lot of positive numbers coming out for a long enough time that gives you the confidence that, okay, as an economy, you're moving from recession into an economic growth phase, right? You kind of just have fluctuating numbers.
Yeah, you guys just have to understand the spot that the Fed is in right now, where they're and we were just talking about it, like Sharma was saying, like right before the 2008 market crash, they were trying to increase rates, and I think they only got to one or two before the economy completely crashed, catapulted by the subprime mortgage crisis. So right now, again, Sharma was mentioning that they have much different policy now, but right now they're trying to do the same thing where we're seeing inflation in many different sectors. When it comes to energy, you see lumber is actually coming down now. You see many different clothes, food. You definitely see food going up right now, where they're saying that, okay, maybe this inflation is not temporary right now, but actually we need to start increasing interest rates. But are we going to be able to do that without crashing the market? Because the market is propped up right now. Honestly, we're in a bubble, right? Now, how do we keep this propped up by also increasing the value of the dollar and increasing interest rates? It's very difficult to do. So that's why you see their language changing, going back and forth, back and forth. And the fact when they came out, what was it? Thursday? FOMC?
It
Yeah,
was
right.
on Wednesday, and
It was
then
Wednesday, yes. So Wednesday they came out saying, first of all, seven members were saying that they didn't see increased interest rates until 2024, only once. Now they're saying that they're going to see it twice by 2023. So Sharma was saying this is all sentiment, but it's still a big deal when it comes to moving the markets and people thinking prices going one way and the other way. Um, them saying that, and then also Powell coming out during his press conference and piggybacking off of what they were saying, it shows you that they may be increasing interest rates maybe once by the end of the year.
yeah,
Um,
that's
so
what it states right here, that in comparison, the Fed has signaled that's likely to lift interest rates only in 2023, but it's also conditional, right? So it doesn't mean that if you have, right now we're seeing economic growth happening and they have identified that in the monetary policy statements. So it doesn't mean that if things just go crashing down, they're still going to increase interest rates. It's conditional on the fact that if things continue the way that they are right now, or if things, get much better, then they're going to increase the interest rates. But same exact thing, the market right now is simply being pushed by market sentiment. What are the investors feeling, right? And then as an investor, if you're ever kind of stuck or you don't understand like how to think like an investor, what are the investors thinking and how do you kind of understand all this news that's coming out? Think about it like if you were to go invest in a company, right? You have a lot of different companies to choose from. Same thing as an investor, you have a lot of different countries to choose from, right? They both either they fall into two categories, either risk haven currencies and commodities, or they fall into risk currencies, right? And so as an investor into a company, would you go and invest, let's say if there's market uncertainty, there's not much happening, there's let's say there's a recession happening and all of that stuff. Would you go invest in a company that you know for sure is a safe haven, or are you going to go invest in a company that you think is risky, right? So which one are you going to go to? If there's growth happening from an economic perspective, if I know that, well, right now the economy is very strong, there's new ideas coming out, there's actually demand for this technology or this product or this service that this company is putting out, yeah, I'm going to go invest there, right? But if there's no economic growth happening, and I don't think that at this very moment, your technology is great, your product is great, your service is great, but I don't think there's a demand for it just right now. I'm not going to go put money in that company, right? That's way too early stage for me. I'm going to go invest in a company that's a little bit more safe, but I know that I'm going to get returns on it. So think about as an investor. It's the same exact thing when it comes to the foreign investors side or perspective or sentiment, right? Now, these companies are just now turning into countries, right? Are you going to go invest in a country that's risky? It's a risk currency, right? Or are you going to go invest in a safe haven commodity and a currency like Japan or the US, which is the Federal Reserve currency? Are you going to go invest in those?
You bring up a good point before, kind of piggybacking off what you were saying before, like they could change their policy out of nowhere. And you guys even see that in the last couple of months where, they've just been saying, inflation is temporary. Inflation is temporary. Then all of a sudden they come out on Wednesday saying maybe it's not so temporary. So maybe we need to do something about it. So just as they're doing that now, wait until maybe the end of the year or even in the next couple of months, they're saying, okay, this inflation is really hiking up, and that's why PCI, PCE, all these CPI, all these different data points coming out this week. Obviously not CPI this week, but we got a couple other data points coming out that the Fed looks at for inflation. If they start seeing that some of these levels starting to hike up, they're going to be tightening some policies and maybe starting to increase interest rates a little bit sooner than 2023.
Right. And even with that, you got to start asking yourself questions like what happens if they do increase the interest rate, right? There's a lot of people who are purchasing homes over market price. There are people who are going out purchasing cars. There's a huge demand for used cars right now in this area. And so, what happens when people aren't feeling as comfortable with borrowing and saving? What happens then if people aren't feeling comfortable with borrowing at that time with those interest rate hikes, right? Or people with variable interest rates, right? So if some people have loans with variable interest rates, which means that every time the interest rate fluctuates, that's the interest that they have to pay. So what happens to those people and those consumers? And think about, again, the consumer as a core of the economy. What happens if you have enough consumers with variable interest rates, people who don't feel comfortable borrowing at increased interest rates? What happens then? Are you going to spiral down the economic activity? Or how are you going to maintain the consumer at that point, the consumer's confidence? Are you going to give them more money, right? Stimulus? Are you going to keep injecting the economy?
And to kind of finish with the fundamental part over here, I think a lot of us trade forex, right? And we're looking at Forex Factory, we're looking at data points coming out, and we're saying, okay, these are just numbers that is really going to move the economy. We can make money on that, and that's all good and dandy, right? But in the back end of that, the Fed and the FOMC statement specifically, what they're talking about affects so much, not only in our country but around the world.
Mhm.
And there's this famous scene in the Big Short. I don't know if you guys have seen it. You guys are all currency traders, so I'm sure you have. Where Brad Pitt, they reached some deal, something like that, and I forget what exactly happened. But these two guys are celebrating, right? They're trying to push this deal to obviously sell some of their stock and bonds and all that stuff. But what they were doing, they were celebrating this, and he goes, "Are you guys crazy? Like, if we're right, the economy crashes. And you guys don't understand this, but if unemployment raises by just 1%, 40,000 people in the US die from either hunger or suicide, whatever the case may be. But these numbers and what Powell talks about, what Lagarde speaks about, what everyone speaks about around the world affects the way people live their lives and spend their money, and it's huge. So think about it in that sense. Next time, FOMC speaking, Powell speaking, like what Sharma was just saying with mortgages and everything like that, it affects everything. So just keep that
Right,
in mind.
right. So again, just think about the consumer, and it's going to get a lot
Yeah.
easier to understand fundamentals.
Yes.
Just to quickly go over the economic calendar, and then we're going to jump onto the technical side. So we're just going to focus on GBP, Euro, Japan, and US. So the major pairs here. So if you're trading Euro, then you want to take a look at what's the German monthly report that's coming out. And again, this is going to be it contains relevant articles, speeches, statistical tables, and provides detailed analysis of current and future economic conditions from the bank's viewpoint. So from the Deutsche Bank, right? So this is what you want to pay attention to. See what's happening here. What's the current and future economic condition sentiment from the bank's viewpoint. And then going on from there, you have the European Central Bank's president speaking twice. Once is right at the New York Open, and then after that is a little bit into the New York Open. And so here she's going to be due to testify at a virtual hearing before the European Parliament Economic and Monetary Affairs Committee. So this is what you want to pay attention to. And then up top here, she's talking to a Women Political Leaders Summit. So those are two speeches that you want to pay attention to, but obviously more emphasis on the one at 7:15 a.m. PST time. From there, you have Bank of Japan Core CPI. So really pay attention to this here as well if you're trading any yen pairs. From there, you have GBP public sector net borrowing coming out. So that's what you want to pay attention to for GBP. This is pre-London session. And then you have industrial order expectations. So this is pretty much a reflection of what's happening onto the retail side. So if the retail side doesn't get enough profit or enough revenue, and they're not able to sell enough of their products to consumers, then they're not going to be putting in more orders to the manufacturing side. So that's what you want to pay attention to. What's their industrial order expectations?
The trickle down effect.
Right. And then on Tuesday into New York session, you have consumer confidence coming out from the euro, and then existing home sales. You could pay attention to that to understand, again, what's the retail side of, the real estate side in the US. And that's what you want to pay attention to if you're interested into looking to real estate. But also that's going to give you some sort of an outlook at what's the market or economic conditions like in the US as well. Again, think about the consumers, right? And then from going on there, you have the Fed chair speaking on Tuesday, Powell testifying on the Fed's emergency lending programs and current policies before the House Select Subcommittee on the coronavirus crisis. This is another thing that you want to pay attention to. This is going to be affecting businesses and consumers. So pay attention to what he's saying there. What's the sentiment? That's what you really want to focus more on in any of these speeches. What's the sentiment like from these central bank officials, whether it's the president, the Fed chair, whoever it is, governor? You want to pay attention to what's the sentiment that they're trying to push. They're going to tell you X, Y, and Z is wrong. This is what we're paying attention to. This is why we're not, increasing or scaling back on our help. But the economy is doing well, right? They're going to try to push a positive sentiment. Again, and that's because they don't want to scare off the investors. If I'm looking into a company and the company's telling me that we're not scaling because we don't have enough money, we're not scaling because we don't have enough people, but our product is great. Our consumers love the products, the feedback that we got, X, Y, and Z. That doesn't help me as an investor, right? They're just trying to get my confidence into that company, into that product, into that service. So you want to really pay attention to what's the sentiment that they're trying to push for, but also what's happening right now. That's what you want to pay attention to.
Mm-hmm. And again, think about what I was just saying. When you see Powell talking at 2 o'clock on Tuesday Eastern Standard Time, think about what I was just saying and what Sharma is saying now with how this affects the consumer.
Right.
We're just gonna keep drawing it into your head.
Right. Exactly. And then on Wednesday, that's the most fundamental heavy day out of the week that we have. You have a ton of PMI news coming out. And so you must have seen final PMI and then flash PMI. If you don't kind of understand what's already the difference, flash PMI matters a lot more than final PMI. And that's because flash PMI is preliminary. And so this is pretty much, oh, actually down here, sorry. So this is preliminary, and this is a leading indicator of the economic health conditions, right? So this is around 3 weeks into the current month. So all the data that has already come out of June. So what are they expecting for the future as well, right? So this is all the manufacturing PMI or the manufacturing purchasing managers index or the services side. This is how we're doing right now using the data that we have. Are they doing good? Are they doing bad? Obviously, we would see that depending on the macro economics of that country. Again, focus on the consumer and then think about the retail side and the manufacturing side. So you have flash manufacturing PMI. I would pay more attention to Germany here. They do have it as a red folder because Germany is the largest economy in the euro. And then you have GBP, and as you continue down from here, you have FOMC member. You have a ton of FOMC members speaking. So again, just pay attention to what's the sentiment that they're pushing out for. But you also have the US manufacturing and services PMI. And then on Thursday, so by Wednesday, I would say about Asian session or even Thursday, London session, expect low volume. And that's because on Thursday, you have GBP interest rates coming out, and you also want to pay attention to their monetary policy. Usually, for I think it's GBP here or the UK here that pushes out their monetary policy a night before they actually release it on here. So if you go on their website, you'll see their monetary policy about a night before or a couple of hours before they actually have the press conference and everything here. So this is what you want to pay attention to. You're able to look at that, look at the official bank rate across the board. I don't think any of them are going to be increasing their interest rates just yet, but they're really going to try to push some positive sentiment. And then Thursday, as always, you have unemployment claims. So another thing that you want to pay attention to, especially if you're trading NFP. And then from there, you have a ton of, again, Thursday is going to be for US, it's going to be very fundamental heavy New York session right when it opens up. So there's going to be a ton of volume that comes in around 30 minutes into open. So definitely give it about 15 to 30 minutes if you're not used to trading fundamentals. Give it 15 to 30 minutes to let price or the market price in all these fundamentals, and then go ahead and look for your setup. But there's going to be a lot of volume that comes in with a ton of fundamentals here. So it also depends. You want to pay attention to, are there majority greens or reds, or if it's mixed, the easiest way to put it, or if it's mixed, then there's going to be a ton of uncertainty. So you want to make sure you're not becoming a wick on any of these trades here.
Yep.
And then Friday, you have the core PCE price index. So this is what Stefanos mentioned earlier. This is one thing that you definitely want to pay attention to because that is what the Federal Reserve is looking at. You have personal income and spending, so you can briefly look at that, but the next important thing is going to be the consumer sentiment and inflation expectations.
Yep.
So that is the fundamental side, and then Stefanos, you can go ahead and do the technical side.
Cool. So over here, let me just move this real quick. We're getting the technicals. No, we're going a little bit over today, but getting a lot of information out of it. So hope you're taking notes. Good one to look over and rewatch. And you can always increase the playback speed as well. I do that on a lot of YouTube videos. But over here, we're looking at GBP JPY. Obviously, we had a very bearish day yesterday, or not yesterday, but Friday and Thursday. GBP has just been coming down from 156. But I just wanted to point this out real quick. As always, I just kind of keep this, and then we'll pay attention to more of the important levels when it comes to support and resistance. But I do pay attention to some of these trends that we're following over here on GJ, where now we're reacting to this. I've been paying attention to this level and talking to you guys about this for weeks or even a month or two now. So as we're coming up, we're now reacting to this level over here. I don't know if it's reacting to this trend as much as it is to that 156 resistance level, but it is certainly something that I'm paying attention to when it comes to GJ. So as I said, when we were coming up to 155, 156, price was going to react to that level. But let's look at where we are more recently from the recovery from COVID. We've been in a bullish trend for quite some time now, just kind of pushing up over here. A lot of positive bullish weeks and months coming all the way right back up to 156, but now we're starting to come down. So let's zoom in a little bit more over here and look at some of our levels. So 156, we're going to mark off real quick. Oh, we got to do our.
And really pay attention to the left and see, where is price tapping into when it's reacting so heavily, especially on higher time frames, right? If you look to the left, there's a consolidation happening. There's already a rejection happening. Like Stefano said, you're sitting at a key level. So really pay attention as we mark the levels here, what's happening to the left.
Yep, exactly. And that's a perfect point, because if you do look to the left past this area, we had a very similar thing happening from the market recovery from the 2008 market crash right over here. We were in this market recovery. And if you look over in this area, once the last time we were at 156, we had this monthly candle coming all the way down to this level right over here, and then closing like a very weak bearish candle. And then the next one just pushed up and just push all the way right back up to 196. So right now we're in that same level kind of where we're reacting to 156 right now. But are we just kind of creating a bottom wick to continue right back up? Maybe this candle by next week is a lot smaller. We get some kind of a not a maybe a rejection at this level, and then we get that bottom wick forming. The next candle passes that candle, kind of like this one right over here, and continues bullish. So we could very well be getting that. But after the lockdowns in the current phase that the pound, or not the pound, but Britain is in right now when it comes to the lockdowns, they increased that to July 19th, I think it is.
Yeah,
And yeah, they increased that. So obviously that's going to bring down the value of the pound. So right now we got to see if they start talking about any kind of monetary policy, but also opening the economy back up, which is probably the most important thing. If that happens, then you'll get that bullish push through 156 and continuing right back up. But right now we are bearish. Well, we're bullish on a macro sense, but bearish in the micro sense when it comes to the last week or two after tapping into 156. So 156, very strong level over here. Now we're coming right back down into this previous support. Let's break it down to the weekly over here and look at this previous support that we were at over here. This is a very critical level, 150.
Right.
So we're going to mark off 150 real quick. Almost got it. And also, I want to mark off 153, which were these candle body highs. This resistance right over here. 3. Perfect. So if you look at the current formation over here, now that we have recent price action, you really don't have to look much to the left as much. But right over here, if you could see, we got that high created, price came down, consolidated a little bit, and then came up and retested that high. Then we created a new high. And now what you guys are seeing, if you trade similarly to the way I do or the way we do, this is a fake out over here. So price is now coming right back into this range over here on the higher time frames, and we'll see what it does. Are we going to retest this low down here? Because normally when I see a fake out like this on the smaller time frames, the 30-minute, the 1 hour, price most of the time, probably 70-80% of the time, if it closes back into the range, it'll retest that previous resistance and then come right back down to the support. And there's also a high probability that you break through the other side of that support over here. I don't know if we're going to get that in the higher time frames, but that normally happens on the lower time frames, which is something that I've noticed over my time of trading. So
I think before you go down to the weekly time frame, another level that would probably just create like a zone in or something like that would be right here exactly. And that's because if you look at it, you have a little resistance being made there, but also look at how many wick rejections you have right into that area, right? And the next candle that started forming, it doesn't even have a bottom wick rejection. So the previous candle, it closed right into that zone, very important zone. Obviously, there's a ton of liquidity. And the next candle, no bottom wick rejection. It just continues bullish. After that, we tap into that 156 and just continue back down. So I want to see what happens down here in this little area on lower time frames, and then how also price is reacting around those areas.
Yep. And if you guys remember, towards the end of April, mid-April, we were really paying attention to 152. Same thing with over here, where we get that first rejection in a months actually. As these weekly candles were coming up, we got our first bearish week over here once we tapped into 152. Then it looked like we were creating our support over here and continuing up, but we had some trouble rejecting 152 again over here to retest these highs at 153. So you're
Right.
totally right when it comes to that. Like we could be getting some sort of a rejection over here, especially because the weekly right now ended up closing with no bottom wick.
Right.
I'm actually, little disclosure, I'm still in sales on GJ from Friday. I just want to see how it plays out. It's still bearish on the lower time frames.
Hmm.
These candles, when they form with no bottom wick over here, could go 50-50. We could completely reverse this move and continue up, or it could just continue right back down. You never really know. So we'll see how we open up tonight. Looking at the daily, I'm surprised that banks are open tonight and prices are opening with Father's Day. No?
I think it's still just the normal Sunday in the foreign
I
exchange
guess
market.
I guess so. Yeah. So again, as you were saying, 152 over here, previous resistance, price could very well react to that level, form support, and continue right back up.
Right.
Right. We got a little consolidation over here. I want to mark this off right over here, 151, I would say it is.
Hmm.
I love this little button right over here. Have you used this?
I have not.
Oh, okay. It's good if you got like multiple different tools that you use.
Hmm.
But you could just change it once you select one of the tools on the left over here. Just click that button, and you got your. Instead of going through the whole thing, it's just like a pain in the ass. But anyway, got this consolidation over here to the left. Price is now approaching it. Looking at the 4 hour. Again, when it comes to these Sunday breakdowns, it's very hard to break down the lower time frames for you because we really don't know what's going to happen. We had our consolidation over here. Price broke through it with interest rate hike talks right over here, and then we reached 156. We then started consolidating over here, printing lower highs, right? So we were also reacting to that monthly bearish trend that we were in, right? So now, once we got to this level over here, price just basically dropped, starting with Friday. I honestly forget what catapulted this.
That entire push
Fundamental.
down started happening after
Are you up?
that was after the interest rates.
You were just muted on my computer. I missed the first part of what you said.
Yeah, so that push down and all of that was after the interest rate. So on Wednesday, the interest rates came out, and then that entire push down happened on the 17th, which was on Friday, I believe. And then that this is also GJ, so this also happened because of the Bank of Japan. So there was a ton of there was Bank of Japan's interest rates that came out. There's also a ton of GBP news that came out. I believe it was. Let me go back to last
Yeah, I
week.
thought it was something specifically out of Great Britain. I know, obviously, it has to do with increasing the
Retail sales.
retail sales as well came out negative, but also them increasing these lockdowns. The current phase of the lockdowns is obviously going to push the pound
Right.
down.
That happened on Monday.
Okay.
That happened on Monday, and then on the 17th, that was the Thursday, and that's retail sales. So they were actually expecting from a 9.2%, they were expecting a drop down to 1.5%, but the actual ended up being negative 1.4%, which is massive drop down, obviously. And so that helped off with the sell off. Another thing that I want you guys to pay attention to, and I don't know, Stephanie, if like you were going to point it out, so my bad about that.
Which
But
one?
it's also look at the consolidation support that's being formed here. And the next, after price has this huge rally off, it comes right back into that consolidation, grabs orders, and has another rally off. And that's
Yep.
what we're sitting at right here at the next key level where the consolidation is happening.
Yep. We got that clean move. This is beautiful right over here. Once you break that consolidation right over here, you close right below it, like Sharma was just saying.
Mm-hmm.
The support right over here. Price kind of comes up, and this whole zone basically,
Right.
right in here, price comes up to retest that level, get a nice strong bearish candle, and this is what I was talking about with candles with no bottom wick. They could go 50-50. This could obviously hold support right over here and continue right back in, but this was too strong of a consolidation where price closed cleanly below it, and we just came up to retest it and then just dropped. So
Right.
that's part of the move that I'm sure a lot of you guys capitalized on. We did as well. But this was just beautiful on the higher time frames. This is what you look for every single time on the lower time frames when you are scalping. So right now we're extremely bearish. We're coming right back down into 152. We're tapping 152. Let's see if this is strong enough of a level where it's like, all right, we're going to hold support right over here, react to this level over here to the left, and then continue right back up. But right now, nothing is pointing to us that price is bearish over here, or that price is going to return bullish. Also, if you guys take a look, since I would say December 2021, we've been bullish.
2020.
Or 2020, excuse me. We've been bullish over here, just printing higher highs, higher lows, respecting this trend. And then all of a sudden we just broke it, right? So now we could get some sort of a retest over here to continue down. Maybe we react to 152, get a resistance right up here at 153, and then we continue down. Really depends. We got to see what we get opening up this today when it comes to opening up the market.
I think there's a very big chance if you look to the left here, there's a little gap that we see across 4-hour, daily time frame, and maybe even on the hourly here. Let's see.
Right here?
Yeah, so there's a very high chance that price could simply, hold on. So there's a very high chance that price could simply just tap into this area, because if you go up to, so pay attention to that little gap that's happening here, and then also go up to the daily time frame, and you'll see that there's a massive clean sell opportunity, very clean traffic to the left that you see here to the left down here. So very clean traffic, but then also you have all the consolidation that's happening down here, right into that gap. So there's a very high chance that we just grab the liquidity from these wick projections right here and then continue back up bullish. The key thing here is, in order for us to break this entire bullish structure for sure and then just continue back down, that is going to happen as soon as price breaks below this little support here. Then you're going to have a nice sell opportunity to 150, and then from there it's a continuation down and you would target other levels. But this is an area that I would target very, very close to this 151 level to see if price is going to break below that support or not.
100%. And like you were just saying, we need a lot of negatives coming out of Great Britain for that to happen, but we could very well get, we've been respecting this trend over here since March of 2020, since the start of COVID. So could we come right back down, retest that level again, right over here, form support, and then continue right back up? We could very well be finding this area right over here. We come right back down, kind of consolidate over here, and then continue right back up. But a lot has to happen for that to happen.
And I think interest rates are going to be a big catalyst for that, and the PMI news.
Oh, yeah. Interest rates are, the King Kong of the forex market. So that's definitely what you want to pay attention to. So we could very well get that, but, but then again, we could very well find support over here and then continue right back up to retest these highs, just like we've been doing for the last, year and a half.
Right. Absolutely. All right, let's move on to gold.
Yep. So just keep a lookout for 152 when we open up tonight. Mm-hmm. So looking at gold over here, bring it down to the monthly. I just want you guys to pay attention to this price action right over here, where we created our historical highs. We point this out every time. Then we ended up in this corrective phase. We retested the previous lows over here, then came right back up to retest the previous candle body highs and also wick highs on the monthly time frame. And then we entered that recovery, right? Mm-hmm. And then a lot happened over here. 2017, Trump came in. We had a lot of geopolitical pressures with Iran, with China, with the trade deal, and then COVID pushing us right back up to 2074, I would say, that we reached. And then we entered another corrective phase, right? We came right back down into this consolidation area, kind of retesting this area as well. And then formed our support right over here at 1680 after retapping it and then coming right back up. But now looking at the weekly, again, we've been in this bullish trend. It's kind of respecting this trend over here. Price is kind of coming right back down into that area. But before that, we created our highs up here. All right, we created our high right up here, entered this corrective phase. A lot going on over here. World coming back into, reality when it comes to a healthier economy. Healthier, not healthy. And then we ended up retesting 1680. So let's mark that off. In the meantime, if you got anything to point out.
It's just also at the current price, look to the left. What's happening there? We're sitting at another rejection level. Right there you go, right above that area. I would say about 1760.
Yep.
So right into that area. In the past, that entire area looked like a little consolidation. And about 2020, early 2020, that entire consolidation before price rallied up, and then it came right back down, tapped into that area, grabbed some more liquidity, and that's when we pushed up to 1900. So this is what you want to pay attention to. Again, that's where we're tapping into right now. And then are we going to continue back up? If the 1760 area is broken, then we're coming down to 1680. 1680 was also, I use a yearly time frame. So on the yearly time frame as well, 1680 is a resistance area.
Yep. I don't have the 12-month anymore. I got rid of my trading view thing just because I have Soft4fx. So I really don't need it.
No, but yeah, whoever has the yearly time frame, just mark up 1680 and then see what happens there. But that's the key level that you're sitting in, and we've had a massive sell-off after. Can you hover over the first bearish candle that started this entire sell-off in June?
Right here?
Yeah, there you go, June 11th. Then you had a massive sell-off breaking out of that consolidation, just continuing down, correcting that entire bullish move up.
Yep.
Right? And obviously the market's never going to just move in one way without any correction whatsoever. And so right now you've had a massive push down, sitting at a key level of liquidity of 1760 at the moment, but just based off the daily time frame. So now you want to see what happens in this zone. Are we going to start creating some support? And we will drop down to lower time frames. We'll start to see some confirmations of where price is headed. But right into this area, are you looking for support to be formed and then a continuation back up to 1900 or 1910 that Stefanos has marked off, or are we going to continue back down? And for that to happen, you need to see some positive sentiment coming up from the macro fundamentals.
And a quick fundamental update on like why these moves were happening as well. If you look over here, this was the ISM services and manufacturing PMI coming out for the US. They came out better than expected. And then all of a sudden you had the NFP move over here, unexpectedly bad coming out. Tapping into this level, grabbing liquidity, and then just heading right back up. You and I both thought that we were going to continue right through here, printing a similar setup like this right over here. Looked pretty similar. And we were going to continue right back up. But then all of a sudden we got the talks of the FOMC and all that stuff. And then all of a sudden the rates talk on Wednesday just kind of pushed going all the way down. Massive move.
Right.
A lot of us took advantage of. So
and that little consolidation that you see is from the investor side. Like I said, again, it's the investor sentiment or the market sentiment that's pushing the market at the moment, a lot of the pairs. And so this is where the investors that were unsure, they were waiting for, is the Fed actually going to mention anything about tapering? Because that's what the discussions were at the moment. That's what the investors were waiting for. And then the news came out where, again, they put out the sentiment. You look at the actual monetary policy statement, they're just saying we're maintaining it right now. These are things that we're looking for, but it's in the additional documents that they have provided, and it's in the press conference that's pushing the market sentiment towards we might increase the interest rates in 2023, and that's what's helping you with the push down.
Yep, exactly. So obviously you have this zone 1760 that Sharma was just pointing out right over here. We're in this consolidation. If we break out of this and close below and get like a retest, we're probably heading right back down to these levels right over here. I would say 1730 would be our next target.
And then after that it would be 1680.
Oh yeah, 1680 is a significant level. And then we get that cleaner move as well. We get a clean move here as well. But this should be interesting. If gold comes all the way right back down to 1680, again, you're going to see a very similar price action when it comes to this market recovery right back over here. Because then, once we tapped into 1560 right over here, we came all the way right back up to retest these candle highs. And then we came right back down to 1560 and then continued right back down from there. So
And
are
these
we
are
getting
things,
something similar?
yeah, and these are things that we have mentioned before too, that there's a very high chance that we're just going to follow whatever's happened in the past, which is on a higher time frame. That was just consolidation back in 2011 to 2013, when the strong macro fundamentals started coming out right there. That was just consolidation. There's a very high chance we're going to do the same exact thing right now in the current market conditions, because we did tap into 1900. So if you go back to the right here to the current market conditions, so we tapped into 1900, we're grabbing liquidity from there as you saw, and then a massive sell-off where we're starting to break the previous monthly low. Maybe we're going to come back and tap into 1680 and just consolidate there. Once you tap into 1680, maybe we grab some more liquidity, and then that's when the fundamentals start to line up for massive, the market condition that we're looking for, the bubble that Stefanos was talking about. Maybe we start to see some more negative news from the macro fundamental side, maybe a third wave happening in a lot of the developing countries. Yeah. And then we push back up to 1900 again.
Or, as we were saying before, FOMC comes out saying that we might be hiking interest rates before 2022 or 2023, and they hike interest rates at the end of the year. You're going to get something very similar to what we saw over here.
Yeah.
Right? We could come right back through 1680 over here and continue right back down if they actually do increase interest rates. So
they need to increase it, and they need to have the economy be able to sustain it. They need to make sure that their interest rates are in line with their target. If that doesn't happen, they increase the interest rates, you may drop below 1680, but very quickly in like a month or two, if the economic conditions worsen, you're going right back up to 1900.
Yep. If they increase interest rates too fast and they do it prematurely, that you can say goodbye to the bubble economy that we have right now.
Absolutely.
So I think that's about it, right?
Yeah, so this is the weekly outlook. Make sure you guys are trading safe. Make sure you're looking at levels. You're paying attention to little details. Where are the rejections happening? Look to the left. Always remember to look to the left. And from a fundamental perspective, whatever news that you're looking at, think about how does it affect the consumer. And if you were the investor and you were, break it down instead of countries, if that's too big for you, think about companies, right? How would you react if that was simply a company and if you had to go invest your money in it? But as always, feel free to reach out to both of us if you guys have any questions. For Stefanos, like just comment under the YouTube, or is there any other way that they can reach out to you?
I think YouTube for now. I'm still working on getting the Instagram back, but I just wanted to say, like, listen, I hate asking for things, and this isn't what I'm trying to do. It's more for other people, but we're giving you guys all like free information, and we do this every Sunday for you guys. So the most we could do is just ask for you guys to share this so that it can help more people. Just like, subscribe, do whatever you can for both of our channels. It'd be huge help for a lot of people around there, and just get our names out there as well. So that's all we ask for. Just enjoy, take notes, get the most out of it that you can, and also ask questions whenever you have them. So, and Sharma and both of us are more than willing to help you guys out and either jump on a Zoom or do whatever you guys need us to do. But we're looking to help as many people as we can and spread the word, spread the name.
Yeah, and that's definitely something that both of us do. Like if you need help, we're both willing to jump onto a Zoom call whenever our schedules are, open, available, whenever your schedule and our schedule kind of meet. So we're both willing to jump onto Zoom call. We're both willing to do whatever we can to help you guys. So also another thing is, just comment below to let us know what part did you like, or if you guys have any other questions, or if you wish there was something else that was part of the video here, and we'll try to incorporate that next time. Again, we're trying our best to provide as much value as we can. So let us know, how can we personalize this for you, customize it to your learning abilities.
Yep. And let us know how you like the course. I know Sharma's doing her own basics of Forex course, but we're doing a psychology course as well. So let us know if you want to see anything else in there. But with that, happy Father's Day, fathers guys out there. I know it's a tough job. Same thing with Mother's Day. It's, raising kids, raising the future generation. It's the most important job you could have. So keep doing what you're doing, and I'll see you guys next Sunday.
Trade safe, everyone.